there's been a lot of talk about the 4-year cycle and the 4-year cycle being dead. And if I'm being honest, I was sort of in that camp. And when I look at it, again, I know you have a technical analyst background. I never really believed in charts that much, but my old business partner, he was an amazing TA chartist. And I would look at the fundamentals, he's looking at the technicals, and for some weird reason, coincidentally, they would always seem to line up. And so it's almost like they can read each other. But when I look at this 4-year cycle, to me, it seemed like it was dead. But the reason, in hindsight, looking backwards, it's like all the reasons that created the previous 4-year cycles were gone. So it must be dead. But per the 4-year cycles, the new all-time high is 18 months after the halving. And in 2021, November 2021, after Jerome Powell said he was not even thinking about raising rates, he said that he was going to keep rates low for 4 years. He came out and made a press release and said, we're going to start raising rates. And then boom, it sold off. Now, how did the 4-year cycle know that Jerome Powell was going to make that announcement? And now it's over because instead of raising rates, now the Fed is lowering rates. So for sure, it can't be the top of the cycle. But sure enough, 18 months after the halve, you mentioned October 10th. October 10th is when Donald Trump threw out the tweet about 100% tariffs on China, which then the market started selling off, and then everything cascaded down. But how did the 4-year cycle know that Trump was going to make that tweet? But it was 18 months after the halving. And so so the problem that I have is two things, and I want to get your take on this. So one, all the reasons that created it last time in 2017, if you remember, it was because Facebook and Google banned all advertising. The banks and credit card companies stopped any transactions, so they literally stopped the market. Then you had Powell raising rates. Now it's Trump's tweet or whatever. But then on the flip side, and this is the part that I want to get your opinion on, well, all of that, but now it's is it dead? Should I be buying? Because every new cycle, we see a new narrative as to why it's dead. Now it's quantum, before it was something else. So it changes, but right on schedule.
Yeah, I think the narratives follow the price action to some degree, right? Because as you even mentioned at the beginning, people sort of need to explain the reason that things happen in markets and in life, of course, right? And so I think that the narratives are drawn from what happens with the price. That said, the true deep technical analysts, and I don't necessarily believe this, believe that all of the news is in the charts, as you sort of alluded to, and that if you actually think about what technical analysis is, it's just humans making bad decisions. Right? You want to be on the other side of a human making a bad decision, and where are the most humans going to make a bad decision? It's some level of support and resistance where they've made bad decisions before, right? Or where the crowd is likely to come, it's going to come to a confluence of too much fear, too much greed, and that's where things are going to bounce or reverse. So I think that's the reason that it tends to align, because the markets really come to a fever pitch at the perfect moment for a big news event to rock them. But that said, when I look at the 4-year cycle, I think there's a lot of ways to define the 4-year cycle. So the original definition of the 4-year cycle obviously was about the halving. And I think when Bitcoin was more nascent, a much smaller asset, supply reduction every 4 years, an increase in difficulty because of the size of the market made a massive difference, right? There wasn't that much demand relative to supply. So when you cut the new supply issuance in half, the demand really, even just staying flat, meant price was basically going to double, right? Just rationally, mathematically. Now, I mean, Michael Saylor buys more Bitcoin that's issued in any given week. Right. So the halving itself has become more of the catalyst for that 4-year cycle, but I think it's just a narrative and is not actually fundamentally making a difference. But that sort of is where the entire, myth or belief in the 4-year cycle was born of. A lot of people have made very compelling arguments. It's actually more about a liquidity cycle, or that the 4-year cycle itself and the halving always align with the election cycles. And I think that is a way more compelling argument than just the halving itself. But also, when you look at the Bitcoin 4-year cycle, to me, I look at the crypto 4-year cycle. Even though I view the rest of the crypto market as very different than Bitcoin and almost separate, you've seen patterns of how altcoins behave when Bitcoin does certain things in the past. And this time, all bets were off when it came to that. They just never performed. They never caught up. Retail never rotated. So clearly, there were very different fundamental reasons, like the ETF and treasury companies, that were pushing Bitcoin higher in this cycle. That said, the one very compelling argument for the 4-year cycle, which you made, is that the market topped at the perfect time.
Yeah.
Now, it didn't have a blow-off top. it was an extremely muted top, not even 2x from the
I mean,
previous all-time high.
yeah, the top wasn't as high, but it's a 50% sell-off.
Yeah. But like I said, I mean, how many times have we seen 30, 40, 50% sell-offs even in bull markets
Yeah.
every time, 6 or 7 times a cycle,
Yeah.
right? I kind of align with the thinking that I presented before from Matt Hogan, which is that retail just really never got involved here. They're playing in silver. They're speculating in predictive markets on tomorrow's weather and who's going to win a local election. They don't need meme coins and random altcoins just for the ability to gamble like they did in the past. And so when the speculators leave, crypto looks very, very ugly.
I mean, there's a whole conversation there, but we don't need to dive into that. But, I would, of course, say that crypto is dead. And for a lot of the reasons that you just given, it was always a more volatile play against Bitcoin. But now we have so many other options that are more volatile against Bitcoin, just MicroStrategy alone, plus all the other treasuries. And so a lot of that's been sucked out of the air. I ran a chart a week ago, I think it was, or 2 weeks ago. And I basically looked at Bitcoin's growth since the bottom of the last bear market, so 2022. Compared to the crypto market cap, removing Bitcoin, Ethereum, and Solana. So just removing the top 3. And the crypto, and keep Ethereum, keep XRP, whatever in there. Just take those 3 out. And to your point, yes, it's completely flat since the bottom of the bear market. So there's been no, and there's 19 million of them today. So that market is just completely dead. But the question is, back to what I was saying is, I put this on Twitter yesterday, I think it was, and I haven't been posting a whole lot. I mean, there's just the way the algorithm has changed, man. It's like a dumpster fire on Twitter right now. I don't know if you've been seeing the same thing.
Oh yeah.
Like
brutal.
I jump on and I just look at all this stuff and I'm like, oh my gosh, I'm out. So I haven't been posting that much recently, but I did post something yesterday and I was just saying how, now I've been in since 2015 and these drawdowns maybe get a little easier, but they're still tough for even somebody like me. And I've never sold a single sat ever, but I haven't had the conviction to buy heavy at the bottom. And I was saying how, because every time at the bottom, it's a different narrative. And I'm like, man, I kind of already have enough. Do I really want to put more in? What if it doesn't come back? So I'm curious how you think about that. Here we are at a 50% drawdown. It's bouncing today, but who knows if it keeps going down. How do you think about buying back in, or selling out, or buying in heavy, or at times like this when that narrative is telling us that it's dead?
I've bought more Bitcoin in the past couple of weeks than probably ever before in a dollar-denominated amount. Obviously, I was able to buy a hell of a lot more of it when I was buying it at $3,000 than I am in the 80s, 70s, and 60s. But I have extremely high conviction. And for me, I feel what you do, but I also have no idea where I would rather put my money. And if I'm doing particularly well in business at any given stretch, I can look around the market and say, am I going to buy silver at 110? When it was 26 months ago?
Yeah.
Am I going to buy gold here? No, I'm just going to keep buying Bitcoin and wait, right? And so because my mind has Bitcoin as my savings account, I don't even really view it anymore as buying Bitcoin. I just view it as moving my cash into my savings account. And so for me, that is buying Bitcoin. That said, when it started getting here in the 60s yesterday, I was almost euphoric. Everybody's panic selling, I'm panic buying. That's where I've come after all of these cycles and all the brutal pain and the experience with crypto and all coins going to zero and riding it all. I feel very comfortable in Bitcoin.
Yeah.
And I just keep buying it. I've really been buying a lot. I also run it algorithmically. I add to that sometimes when it's lower, so I don't really think about it much. I have a great company I work with. They're called Arch Public, but it just buys any 3 to 6% dip depending on the timeline that you set. So if you want a dollar cost average, you're going to do 2 or 3% better over time. And I just let it run. I keep reloading.
So you set like a percentage of drop, so you're just like constantly buying the dips, like the daily dips or something like that.
That's right. So instead of dollar cost averaging on Monday at 9 a.m., instead it's doing it on a candle, depending if it's a daily or 12-hour, 6-hour, how you set it, where there's the worst price action, right? So you're always buying instead of buying, you're going to probably get a 2 or 3% better price on your dollar cost average.
Yeah, I love that. This morning, I've been writing a report that I'm going to publish. It's a few thousand pages, words. I mean, not pages, a few thousand words. But about the different approaches to Bitcoin, because, I think about it personally as a partner of the Bitcoin Opportunity Fund. I have to think about it from a fund perspective. And then I think about maybe from like a trader perspective. And there's like different approaches that how you would think about this. And if, like, one of my friends runs a fund, it's not a Bitcoin denominated fund, but he loves to trade Bitcoin. As I think part of the reason we've seen such a dramatic sell-off is the hedge funds are heavily trading Bitcoin through ETFs, IBIT specifically. But he loves trading Bitcoin, and he'll buy it at 40, sell it at 60, buy back at 75, sell it at 90, buy back at 110, whatever. And he's getting more dollars, but he ends up with less Bitcoin. And so, like, when you look at the chart, it looks so easy. Oh, if I just sold here and bought back in here, you could get more dollars, but the chance of getting more Bitcoin is statistically very, very low. And you're shaking your head, so I'm guessing you sort of agree.
It's a fool's errand. Like, nobody is a god tier trader enough to beat it over time. And that's honestly, that's very common across all markets. Like, you ask almost any person who's tried to aggressively day trade or swing trade for any meaningful period of time, even if they made money, and I'm talking about with stocks, if they go back and take an honest look at what would have happened if they had just bought QQQ or SPY and ridden it without doing anything that entire time, they've probably underperformed. If they've done very well, they've tied or beat it by 1% or 2%, and they've spent hundreds of hours of their life when they could have been doing nothing, wasting time trying to beat the market. And beating Bitcoin is even harder.
Yeah.
I really believe, especially because a lot of people who try to beat Bitcoin either do it with altcoins, because that was the way to do it in previous cycles, and that's obviously been a massive losing venture, and it was hard even before. And a lot of people do it with leverage. And we've seen that even if you were playing your leverage right, a lot of times over the past few months, that exchanges basically break and liquidate you anyway.
Yeah.
So good luck.
Yeah. I mean, that's part of the research that I put together in this report, which is even if you do it right, you have two drags. So number one, you have the spot conversion. You're going to lose a couple points on that, a point at least. But then you have the tax drag, and that could be 20 to 30, 40%. So even if you do get it right, you're still losing, 30, 40%. I mean, in short-term trades, maybe up to 50%, plus the spot conversion. So like you have to win by a large margin just to offset that alone.
Hey, if you like this short conversation I just had, you're going to love the full-length conversation. Don't miss it. You can go ahead and click right over here, and I'll see you over there.